Hello, welcome. This is Blockchain Bloom, the blockchain educator. My name is Adela Pinky, and in today's video, I'm going to talk about that Justin Sun announced a new algorithmic-based decentralized stablecoin back with Throne called USDD. And there is an article in Wall Street Journal about the risk of algorithmic stablecoins. You know, it's the same with DAI and also UST, which is Terra stablecoin. So let's get into this issue a little bit. The second thing I would like to talk about, why is the market dropping again? It is because Jerome Powell. And the third news is all about that the government in the Bahamas hopes to allow residents to pay taxes with digital assets in this year. So guys, all this in today's video. And of course, keep yourself up to date in crypto. This is crucial. Therefore, I'm making you videos every single weekday about the freshest news and explaining things here. So it's very important to subscribe to this YouTube channel so you can stay up to date. Also, check out the links under this video, many useful ones. You can use them very well and save money with those. Okay, and now it's time to look at the market. And there we can see that actually there's a drop in the market right now. Bitcoin is at the moment 3.6 down, which is 40,432. Ethereum went just under $3,000, 3.3% down. When we're looking at the winners, they're not too strong. Tron 7.6 up. Then we have Theta Fuel 1.8 and Polygon going up 1.2. When looking at the losers, Synthetics Network leading with almost 13%. Then we have EOS 8.7 and FracShare 8.3. So now we are having a rather reddish moment at the right now. And when we're looking at the candlestick chart, we can see that we're still holding this trend line. So far so good. But we can see that the bulls getting weaker here right now and getting the bears a little bit above them. Still holding, you know, the very, very important, line, which is here at 37,500-ish, above it. This is important, so we're not forming a lower low, because that would make, bearish the whole thing, which has already started and working pretty well since mid-January. So hope this will be fixed here. But of course, there's a scenario that Bitcoin again goes a bit more down, as we do know the economic situation of the world. Okay, and now let's move on to the first topic. And the first topic, as I mentioned, is all about that there is a new stablecoin out, which is an algorithmic one. I mean, at least announced by Justin Sun, it's coming. This is USDD. And let's talk about the risk of algorithmic stablecoins. Okay, so algorithmic stablecoins getting more and more popular nowadays because pretty much of Terra right now, because Terra is buying heavily Bitcoin back up UST, which is their algorithmic stablecoin. We do know DAI is here for a while, and now the new one could be, let's share the screen, as Justin Sun reveals that USDD. So he said yesterday that USDD network will provide custody service for the $10 billion worth of highly liquid assets raised from blockchain industry initiators and use them as an early stage reserve. Basically, USDD will be pegged to the underlying asset TRX, Throne, and issued in decentralized manner. So basically, when USDD price is lower than USD, users can actually send USDD to the system and receive one USD worth of TRX. Just to keep the balance, basically. Many people suggest that they should have also Bitcoin as a backup, not just TRX, just like what Terra does. So we'll see how this story will turn out. But what I would like to talk about, this was just like idea which brought me the worries what people have about algorithmic stablecoins. And there's actually a great article about it here in the Wall Street Journal. And to more understand what's the problem, what could be the problem with algorithmic based stablecoins, let's get into the Terra's case, for instance. So how Terra works, and then I move on to the DAI. What happened to DAI back in March in 2020 when things got out of control a little bit, and this is what people are worried about. So the debt spiral, but about it a bit more. So here's how Terra's USD works. So if the price dips below $1, traders can burn the coin in exchange of $1 worth of unit of another one, which called Luna. Okay, so then you get Luna to reduce the supply of Terra's USD and raise the price. Conversely, if the Terra USD climbs above $1, so going in another direction, traders can burn Luna, create new Terra USD, and that increases supply of the stablecoin and lowers its price back to $1. Bottom line, keep it as close as you can to $1. In other words, collective efforts to traders seeking to make quick arbitrage profit should keep Terra's USD within a relatively tight band around $1. As I said, Luna effectively acts as a shock absorber for Terra USD, buffering volatility in Terra USD. Okay. And we have the scenario when an algorithmic stablecoin drops below $1 and nervous traders step back from the arbitrage mechanism that keeps it pegged to the dollar because they need it. If there aren't enough traders willing to buy the coin and push it back to $1, the market faith in the pegged could erode. So they're saying, maybe it's something wrong with this. That could prompt even more traders to flee, accelerating the coin's decline. And this is the danger zone, basically. And here we said Mr. Solomon saying that no algorithmic stablecoin is safe from that spiral. They are inherently fragile, he said. And now, because of this, so this could be the issue with this algorithmic stablecoin. Because of this, let's check out what happened basically in March back in 2020 with DAI. So basically, the crypto market crashed, as we know, and it showed actually a demand for stablecoins. So cryptocurrencies tied to the stable assets, such as the US dollar, experienced a sharp rise. So we had the US Tether, USDT, and then we had all the others. And the difference between algorithmic and the kind of put it like the normal one, but because the USDT and USDC, it's back with real US dollar and other assets. But the algorithmic one, as I just showed with Terra's example, and the future will be for USDD, the new one, it's an algorithm which keeps it at $1. So, we have the CDP, which is the collateralized debt position. So just remember what it is. So if the collateral value falls below 150, that was in case of DAI, percent of the loan size, a process begins that liquidates the collateral for DAI, which subsequently burns by the system. So this liquidation process theoretically cost the holder of the CDP 13% of the deposited token. Okay, so this is what you have to pay when it goes under it, and then you get back the rest of the collateral. On March 12th, the CDP started to automatically liquidate as Ethereum fell at a record clip. The problem that some owners of liquidated loan positions received none of the Ethereum back. So basically, what is your collateral? Again, CDP liquidation process is supposed to cost approximately 13% of the collateral and not 100%. So they didn't get back anything. And the 0% return in CDP collateral was a shortcoming caused by a combination of two things. We had the deviation between Ethereum's value as interpreted by the oracles and the actual market price. So basically the oracle service, which keeps the connection, is basically the bridge between the smart contract and the real world, didn't get the right information. The second thing, the network congestion. So this resulted the liquidators of loans failing to properly sell collateral. So when they had to act, they didn't act. And this caused, you know, a fall for DAI. And it was a dangerous situation. And therefore, many people saying that algorithmic stablecoins are not safe because if something like happening, something is wrong with the Oracle service, something is wrong with the smart contract, it's dangerous. And if that spiral starts, it's getting worse and worse, and it just like goes down. And we had several actually which went even had a worse case than die, and actually they really died. Put it this way. So just to know how algorithmic stablecoins work compared to the normal ones and what are the risks. However, many people saying this is the future, but definitely the smart contracts, the Oracle services, and everything has to work even better and better, smoother and smoother. This would be crucial. So the future will tell what people will trust, and also will this issue continue or it will be fixed. Right, second topic I would like to talk about is we having now this drop on the market. What caused it? Let's talk about it. Again, we had, you know, we just kind of, you know, touched the bottom. That's what we believed. And then we looked forward to a nice increase. And then, come on, what happened again here? What happened? Let me share you. Announcement from Jerome Powell, which was basically what we expected. Nothing new. We knew this going to happen. Still, the market acted like this. So what happened? That there will be a 50 basis point hike possible for May. And is that new? It isn't. So we did know that there will be these federal meetings. And every single meeting in this year, what they announced, there will be a hike, and it could be like a 25, it could be a 50 basis point. We had the 25 back in the last time. Now it will be probably a 51, but it's not a surprise. Still, the market acted like this because we do know what that means. But on the other hand, they're saying they have to fight, inflation, and this is the way they used to do it. That's why they do it in this way. It's a very hard situation right now, but definitely this brings another uncertainty on the market, even that this news was expected to happen. Okay, and now the third topic. And the third topic is all about that the government of the Bahamas hopes to allow residents to pay taxes with digital assets already in this year. Okay, so the Bahamas, and as we know, they're really working on digital assets and really make it happen. And if you remember, in October 2020, the Bahamas became the first jurisdiction to fully roll out the CBDC. Okay, and now what is the new? Let's talk about that. Now they're saying that the government hopes to allow residents to pay taxes with digital assets in 2022. So the Philip Davis, who's the Prime Minister of the Bahamas, said that we have a vision to transform the Bahamas into a leading digital asset hub in the Caribbean. The residents of the nation, the Bahamas, may soon able to use digital assets, including the world's first central bank digital currency, otherwise CBDC, to pay for taxes. And what we can see that this is the Bahamas, but we do know how hard China is working on the digital yuan and make it really work. And then we do know about the CBDCs and everything. So the direction is definitely going digital. And this is why I have big hopes for also Bitcoin, which is, definitely a decentralized, and this is one of the most important thing in Bitcoin, decentralized digital currency, because, CBDC, they're definitely centralized, as the name, suggests. Therefore, we do need something in the digital world which is decentralized, so it's not controlled by a single authority or a government, because it's decentralized and nobody controls it in this way. But the way that we're moving digital, the whole world is moving in this direction, it's inevitable. So I think it's getting just stronger and stronger. And in a couple of years' time, it will be obvious that, of course, we have the CBDCs, which I have discussed previously, that it's not the best thing because they're going to have a full control over your money, because cash will be out of question in a couple of years. So everything will be controlled by those authorities who make these CBDCs. Therefore, I think it's very important, but not financial advice, but I think it's very important to have something which you can control a bit more. And this could be Bitcoin, actually. Okay, guys, that's it for today. Don't forget, subscribe to this YouTube channel if you would like to get this daily fresh cryptocurrency and blockchain news. And hit the like button if you like this kind of content. I wish you a great weekend. I'm back on Monday. Have a good one. Bye-bye.